Hello and welcome to this stock analysis update for Rockhopper Exploration. Before I start this video, please remember that I do these videos just for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. Rockhopper are a oil and gas exploration and production company based in the Falkland Islands. They own these North Falkland Basin licenses, which they've farmed out 65% of those to their partner Navitas, and they also own 100% of these Southeast Falkland Basin licenses. The North Falkland licenses are mainly centered around this sea line project, and there's lots of development drills that have been done in the past. This is a well understood proven oil resource. They've put together a development plan with Navitas where they're going to use a mobile offshore drilling unit to drill 16 production wells, and then a floating production storage and offload unit will come along to those wells and then one at a time produce oil and then offload them onto oil tankers. So it's quite a nimble project. And here you see the oil that will be produced from phase one and phase two of that project. And I've got here the cash flows expected from that. This is actually the Navitas share, but the Rockhoppers will be roughly half of what you see here. So as you can see, after just 3 years, they should have quite a lot of money rolling in from that. And it's a nice plateau going over about a decade. They also own these Southeast Falklands Basin licenses. However, they've only ever done one drill there, which was not really a commercially successful drill. However, there is potential that in the future, if they did another drilling campaign, this could be quite a significant area of gas production. A different company, Border and Southern Petroleum, have actually done one successful drill here, which produced potentially commercially viable gas condensate and natural gas. However, they did that drill back in 2012, and for over a decade, no one's been interested enough in partnering with them in this. So this really isn't of interest to us at now. Rockhopper's all about will they get the final investment decision for Sea Lion. However, it does add a little bit of spice in the future. Once Sea Lion gets going, this could be some serious uptick, which would be of great interest if we ever get there. So Rockhopper are all about this Sea Lion project. And back in 2022, they agreed a heads of terms agreement, and Navitas signed a technical agreement for this project, and Rockhopper farmed out 65% of the license for that. Now I've been covering Rockhopper since 2022, and if you go back to my videos I've done in the past, you'll see lots of Rockhopper videos. Most of these have been charting the story where Rockhopper were always on the verge of running out of money. However, in 2022, they achieved a 10 million capital raise, and that, in addition to some warrants they sold, bumped the money along until the end of this year. But they really were in danger of running out of money at the end of this year. However, in the December of 2023, they announced that they had actually achieved the monetization of this award they have, a Brian Mayer Award, and this is the arbitration that was going on with the Italian government. Rockhopper own a load of assets in Italy, but the Italian government decided back in 2015 to just ban all hydrocarbon exploration in certain areas. And this was highly illegal. Rockhopper had been taking them to court. In December, they managed to get some lawyers to monetize this award. So the lawyers pay them 15 million plus 65 million in the future, plus more perhaps, depending on how the case goes. And that means that Rockhopper can just sit back and not worry about the court case anymore. They get 15 million up front plus 65 million if the awards happens. In return for that, the legal company get all the remaining of the 190 million that should be coming their way. So back in January, I did a video on this award, and I went and bought back into Rockhopper, having sold out because I was worried about them not selling all their warrants. But in the end, they did sell all their warrants. Plus, they got this monetization, and it's interesting that the share price didn't really initially react to that positive news. So I think that it was good that I buy backed in then, based on the news flow. And only a week ago, Rockhopper announced that they'd actually received the first tranche of 15 million for that award. And they also said that they now have 27 million in the bank. So after several years of them always being on the verge of running out of money, they now have actually quite a lot of money, and plenty of money to last them at least till 2028, based on their current cash burn. So this is fantastic news for Rockhopper shareholders. And now it's all about, will Navitas achieve this final investment decision or not? Now, my last video, I did a video on Navitas Petroleum, and they look in amazing shape. Things are going so well for them. And it really does look to me like there's a good chance that they will achieve this final investment decision. But there's no way of knowing if that will happen on time this year or if it will run into next year, particularly because there were some delays on the Shenandoah project at Navitas. There's no way of knowing, but the good news is that now that Rockhopper have 27 million in the bank, it doesn't really matter if it happens this year or next year, as long as it happens. And Rockhopper have said in their investor presentation, which is available from their website, that if the 65 million comes in for the second tranche, then they'll have enough money to pay for all of phase one, as well as keep going for the next 3 years. So things really are looking quite rosy, I think, for Rockhopper all of a sudden. And here I've got the NVP 10 of the phase 1 and 2 of Sea Lion. And even after I take away the 75% windfall tax, that would still be a 650 million gain. So that's actually a 10x from their current market cap. And of course, the thing about the windfall tax is, I think, although I don't know, but please say in comments, people, if you think you know the answer, but I believe that the new capex expenditure, they'll be able to cross off against the tax. Given that they're a new exploration company, it could even be more than the 650 million we have here, once you take that into account. So here's their historic share price. And I've actually gone into these news items, but they do seem to be in a channel, and that does kind of tie in with the progression towards the final investment decision. Myself, my gut feeling is that they're going to drop from here. Actually, it always seems to happen when the amazing news comes in, like they've just flooded with cash from that Prima Mayor award. But that my gut feeling here is that they'll stay in this channel, even if it may drop from here. But then, of course, when the final investment decision happens, my game plan is I'm expecting like a 5x from that as a minimum, and then I'll sell 80% of my Rockhopper, and then enjoy keeping an amount, which will still be quite a nice, sizable amount anyway. It'll be great to enjoy following the future of this company whilst having cashed in well in excess of my initial investment. However, please also remember that this is a high risk speculative play still. And if that Navitas final investment decision doesn't happen, you could lose it all. So looking at the numbers, because they also brought out their full year report for 2023 since I last did a video, and there's no revenue coming in because assets have run out. The oil producing areas are now dried up. And so really they only have residual expenses, which are just the admin expenses and cost of sales. Now, they still have cost of sales of about 1 million a year, and this is because they've kept going their production facilities, at least perhaps in a mothballed state, for what they call future development options. However, what I think that means is, you see down here in provisions, there's 20 million of provisions, and that is for restoration of those Mediterranean sites. So I think because they can't pay this 20 million to restore to nature all those sites, they're just keeping them all going in a mothballed state. And so we have to live with 1 million a year of cost of sales, even though they're not producing anymore. That's my take on it. Could be wrong, but that's my take on it. So we have to accept about 1 million a year of cost of sales there related to the mothballed Italian assets. And then they have admin expenses. Now these are going to drop because now that they've monetized the award, they've said that actually 2.7 million of that will no longer be a problem now that they've monetized the award. Plus, they've shut their Rome office, which should help lower the admin costs. But we're still talking about 1.6 million, and they've said they've got a 4 million burn rate. So that does jive quite well with these numbers. So, in terms of income and expenditure, there's not really going to be much going on in the next few years. The final investment decision happens, but that will be great news anyway. And I'll probably be selling then anyway. Till the final investment decision happens, they've got minimal costs going forward with just a 4 million burn rate. So it's nice and simple. And now, for the first time in quite a while, they've got plenty of cash to cover their burn rate. And in the past, there were all kinds of complications going on. And please go and look at my previous videos where I go into all of that. But now it's kind of really nice and simple. They've got 257 million of exploration and valuation assets. Actually, post FID, I'd expect some of these costs that were amortized back in 2020 could actually come back with a vengeance. So that will be a real uplift actually to the valuation of the company just on the FID. But otherwise, for now, very simple on their assets line. But they now have 27 million of cash thanks to the monetization of their legal case with the Italian government. And then on the liability in short term, really, there are several items. So none of this are going to have to be paid until after the first oil. But there are some things to discuss. The first is tax payable. Now, when they did the farm out originally to Harbour Energy for the Sea Line project before Harbour Energy then dropped the project, that then led to them taking on 43 million of tax liabilities. Because Harbour Energy walked away from the project, Rockhopper don't think they need to pay that money. But actually, when you go into their annual report, and there's some good details on this if you go into their annual reports, the Falkland Islands government actually still want 60 million from that. So it's somehow, when you go into the report, it's 60 million they're asking for. Now they actually wrote off the 43 million because the Rockhopper lawyers think there's no way they're going to have to pay that because Harbour Energy walked out. But actually, if you go into the annual report, the Falkland Island government want them to pay 60 million, but according to their legal experts, they won't ever have to pay it. But worst case, even if they did, it won't be until after first oil anyway. Then there's the provisions which I've already covered, so they can just keep on paying the mill a year to mothball the Italian stuff. Then when they're flush with money, when they're actually producing oil, then they can pay it off then. But it is still a 20 million poison pill to think about. And then they have this deferred tax liability, which relates to the licensing back in the day, but which they will have to pay in the future once they start making money. So actually, there's nothing they have to pay now or until they start producing oil. But be aware that there is a 59 to 190 million of poison pills there that they may have to pay on first oil. But really, having noted this, which certainly isn't none of these poison pills are showstoppers. They're just take away perhaps 10% of their gains when they start producing oil. But that aside, really now compared with in recent years where there's been all kinds of complications going on, and they're still producing oil, and it's kind of makes it a lot harder to discern their position. It is actually now kind of quite clean cut when you look at their accounts, and of course, as I always say, the more clean cut and simple the books are, that's symptomatic of a healthy company. So I do this graphic. It's not really so useful for a exploration company who aren't actually making money yet, but you can see how their market cap, what you can say here, apart from now they've got plenty of cash, is really the market cap is still quite small. When you consider that back here, with their partnership with Harbour Energy, they were in, the project was perpetually never going to happen. And you can see their net assets here and their market cap. Their market cap now is still quite a bit lower now that they look like they've got a much bigger, even though they have a much bigger chance of the project happening. And this here represents the NVB10 of phase 1 and phase 2 after tax, including the labour windfall tax, according to my kind of amateur scribblings and work calculations. So according to me, that's what their rough estimate is for NVB10. And as you can see, when you put that alongside their current market cap, you can see what kind of money you could make from this stock if I'm right in my assertions here, and if we're lucky and the final investment decision actually happens. Something I didn't mention before is that after phase 1 and phase 2, there's also potential for a phase 3 where they've already got all the infrastructure set up. They can just keep on going down here, and that would actually double the resources that they're already extracting. So that's what would make this company still exciting to own a small portion of, following the final investment decision. Plus, you've got the excitement of the Southeast Falklands Basin, which is very spicy. So that completes my update for Rockhopper. This monetization of the legal decision they had against the Italian government really is making things now look a lot more steady than they were. And they've got plenty of money, even if the Navitas final investment decision doesn't come until next year. Rockhopper are looking as good as they've looked in many, many years. I'm very excited about them. It's great fun having them as one of my speculative investments with a small proportion of my overall portfolio. I hope you found this video useful and look forward to catching up with you at the next one. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.